sorry if you find this annoying, because I have to, if I give you one big video, sometimes it's hard for you to go to see the question you want to see. So in this way, I have different short videos, okay? Just bear with me on this. Okay, next question, 4-33. Okay, 4-33. How are we doing with time? Okay, we are doing okay. Yeah. So this is the question. Disposition of overhead over allocation or under allocation. So this corporation manufacture precision equipment made to order for the semiconductor industry. The company uses two manufacturing overhead cost pools. One for the overhead cost incurred in its highly automated machining department, and another for overhead costs incurred in its labor-based assembly department. So this company have two different divisions. One is machinery department, the other one is assembly, right? What's the difference? The first one is mostly automated. So the machine hours is a good cost base, cost driver. For the assembly, it's very heavy in terms of labor, right? Human labor. So therefore, the labor hours would be a good cost driver, right? Okay, so the company uses a normal costing system. It allocates machining department overhead costs to jobs based on actual machine hours, using a budgeted machine hour overhead rate. It allocates assembly department overhead costs to jobs based on actual direct manufacturing labor hours using a budgeted direct manufacturing labor hour rate. Okay. So the question is pretty clear in terms of how they are doing this, right? And then we have some data here. So the table presented by the department. Information we have is the budgeted overhead, budgeted machine hour, budgeted direct manufacturing labor hour, and actual manufacturing overhead cost. Okay, those are the informations. And then machine hours and the direct manufacturing labor hours and the ending balances, okay, before proration of unallocated overhead are as follows. Okay, so there are three accounts. Okay, these three accounts are important. So it's a cost of goods sold, finished goods, and work in process. So these lower two lines are for the inventories. Okay, so those are the product costs sitting on the balance sheet on the inventory. Once those product costs, the product is sold, product cost is takes in the form of cost of goods sold on the income statement, right? And you have the information of the actual machine hours, okay, and the actual direct machine manufacturing labor hours, and also the balance before the proration, right? So I'm going to show you a video in terms of the over or under allocated overhead, okay? You have learned this in 2400. So I hope you still remember those things, but if you don't, that's fine. I'm going to show you a video very quickly. How we allocate this, how we are dealing with, how do we treat manufacturing overhead that is over allocated or under allocated, okay? So you can see that sometimes the challenging part is really about going through the information of the questions and then being able to sort out all this information, right, for your benefit. Okay, so let's take a look at the first question. Compute the budgeted overhead rates for the year in the machining and assembly department. Mohammed, you have a question?
Oh, sorry, there's something wrong with my mic. No, I raised my hand because I want to answer the first part.
Oh, okay, I see.
Yeah.
Okay.
Yeah.
There are lots of going on the chat. I just want to quickly see what is happening here. Oh, so this is talking about my my slides, right? Okay, I will provide the YouTube link. Okay, so I sent this YouTube link to the class a while ago. But if you recently registered for the class, you probably didn't get that email. But I will do that again. Okay. Oh, somebody already sent the link. Okay. Anyways, so let's take a look at the first question. Okay. Compute the budgeted overhead rate for the year in the machining and the assembly department. So go ahead, Muhammad. So what is the budgeted overhead rate calculation for the machining department?
So in this case, I would take the budgeted overhead, which is I think 5,850,000
Yeah.
divided by the budgeted machining hours of which is 90,000,
Okay. Very good.
which would give me $65 per
Yeah.
machine hour.
This is exactly what you have learned, right? What you have learned in the 2400, right? Okay, so how to calculate the budgeted manufacturing overhead rate? Okay, so you are using budgeted manufacturing overhead cost divided by whatever the allocation base. And here for the machining department, that's the machine hours, right? So you divide it by the budget machine hour. Okay, so here is my information. So then I found, oh, here tells me the budgeted overhead, 5.85 million, and the budgeted machine hours, 90,000, right? Did you see where I got this information? Did you see I highlight these numbers in the reddish color? Did you see that?
Yep.
Yes.
Yeah, so I spent time to do this, right? The reason for that is I want to help you to get used to where to put the information out, right? Sometimes people, they know how to do it, but they don't know where to find the information, right? So I'm solving this problem with you together, and then I want to show you where I get the information, okay? So you want to pay attention to the right side of the image, because I did highlight where I get the information, okay? And Muhammad is correct. The worked out to be $65 per machine hour, okay? Okay, so the next one would be the assembly department. Anyone wants to try that? Assembly department, Samarin?
Yes, it would be the same. It would be 7,812,000 divided by 124,000. That would be 63.
Which two numbers are you using?
Assembly department, budgeted overhead, assembly department, 7,812,000.
Okay.
Divided by 124,000.
Okay, very good. So we are using these two. Now it's the bluish color. So because now it's assembly department, and remember, this is the direct labor, right? Heavy department. So you are using the direct labor as the base, right? So the budgeted direct manufacturing labor is 124,000, and it worked out to be $63. Okay, that's the rate. Do we have any questions on the first question? Is this pretty easy?
So far.
Okay, 2,400, right? So I'm not. Okay, so next question. Okay, next question. Compute the under or over allocated overhead in each department for the year. Dispose of the under and over allocated amount in each department using different methods. There are 3 methods. The first one is immediate write-off to the cost of goods sold. Okay, so first let's calculate the under or over allocated overhead in each department. So let's do machining department first. Anyone wants to give a try? Okay, Samarin raised her hand, but I'm not going to call you. Okay, I would just wait until maybe someone else wants to have a try. Good work, Samarin. I think you are well prepared for the lectures. Anyone wants to give a try? How to calculate it under an over allocated overhead? So basically you compare two numbers, right? The actual overhead you applied versus the actual overhead versus the applied overhead, right? You just compare that two numbers. So let's take a look. First, what is the amount of the overhead you are going to apply during the year? You have calculated the rate, right? So during this year, what is the amount of overhead, manufacturing overhead you are going to apply? I'm not talking about the actual number. I'm talking about what is the amount you are going to apply. Do you remember how to do that? So you know, from machining department, okay, you figured out for each machine hour, it's gonna cost, right? The rate, the budget rate would be $65 for each machine hour, right? And throughout the period, your question would be, okay, so how many machine hours incurred, right? So I use the number of the machine hours incurred multiplied by the rate. That's going to be the amount of overhead I'm going to apply, right? Does that make sense? 2,400, okay? So can anyone tell me how to do this calculation to figure out the amount of the overhead you are going to apply? Okay, so the Muhammad and the summary. Okay, AJ, okay.
Yeah, I would say it's the difference between your budgeted and actual costs.
Yeah, so how do you calculate the amount of the overhead applied?
You would have your budgeted hours and then the rate, and then you would compare that against your actual costs.
Budgeted hours. Budgeted hours, that's the 124,000, and times, let's say you use your budgeted hours, right? You use 90,000 and you times 65, you are going to get the budget overhead cost $5.85 million, right? Okay, so Rain.
Are we doing like part A just to write it off?
Yeah.
So wouldn't you calculate or take your budgeted overhead and your actual manufacturing, and then there's like, is that what we're doing right now? The machining department? Yeah.
So
each
we are trying to
department.
calculate. We are
So
trying
you
to
just get the
calculate.
difference.
Yeah, we try to understand that we over applied or under applied the manufacturing overhead, right? But so first you want to know what is the amount of overhead that you applied, right? So unlike direct cost, right? Direct materials or direct labor, right? You are able to capture the actual numbers. But for manufacturing overhead, right? The way you learned from 2,400 is you first figured out a standard rate, right? A budget rate. And then you use the budget rate times the actual number. That's how you get the amount of the overhead applied, right?
Right. So that was our rates that we calculated in one, and then we just multiplied them through to the machine hours and the labor hours.
Yeah, exactly. Yeah. So here we are first adding up this actual machine hours. Okay. So we are saying that this is the amount of the machine hours it's going to take. Okay. So you add them up, it's 92,000. Okay. And then how many overhead you are going to apply? For each labor hours, you are going to apply 65, right? In the first step, we calculate the number is 65. So now I use 65 times 92,000 machine hours, okay? So this is the manufacturing overhead I include into my product cost, okay? But what is the actual number? Did anyone see the actual number? The actual manufacturing overhead from machining department. in the exam, you have to look for this information by yourself, right?
5.4.
5470.
5,470,000.
Yeah, that's correct.
5,470,000.
That's correct. Did you see this bluish area? Yeah. So this is where the actual manufacturing overhead cost is given for the machining department. Okay. So you use the actual number minus the allocated number. And what happened is you realize that, oh, actually I over allocated. The actual number is 5.47 million, but I allocated 5.98 million. So I over allocated 510,000. Okay. Does this make sense? So I have to make sure you guys all understand this. Otherwise, we can't proceed, right? So I will count to 3. Give me a sum up if you understand this. 1, 2, 3. Sum up. Okay. Yeah, that's pretty good. Yeah. Awesome. Thank you. Okay. So with that, then the next one would be easy, right? Who wants to tell me the for the assembly department? Any volunteer? Assembly department. So we always have Muhammad and Samarin. Okay. Makiko?
Yeah, so the actual direct manufacturing labor hours, we sum it up and times $63 per hour.
Yeah.
And that compares to the actual manufacturing
Which is?
assembly department, 8,234,000.
Yeah, very good. Thank you. Yeah, that's exactly right. So we are doing the same thing. We are going to use this time. Are you able to see that? That's highlight shifted, right? So this is now we are dealing with the labor hour, right? So we're going to add up all these labor hours, okay? So this is my total direct machine manufacturing labor hours. And then we are using that rate we calculated in the first step, which is $63. So it worked out to be just over $8 million. This is how much I allocated during the year. But the actual number is more than this, right? The actual number is $8.234 million. So I under allocated 170,000. Okay. So for the machining department, I over allocated 510,000. For the assembly department, we under allocated 170,000. Okay. So we need to do something about this. Okay. And there are different ways to do it. You can see A, B, C here at the bottom of the question on the right side of the screen. The first one is the immediate write-off to cost of goods sold. So we need to write this off. Over allocated overhead or under allocated overhead. We need to write it off to the cost of goods sold. Okay. So how are we going to do that? Okay. So I'm going to show you a video. Okay. So I prepared this video for 2400 last semester. Okay. So just pay attention. Okay. It's very short. Okay. Well, today I'm going to show you how to treat the end of period under applied or over applied manufacturing overhead costs with cost of goods sold method. So let's take a look at manufacturing overhead. We are using once again the T account to illustrate the method. So on the T account, the left side is the debit side, the right side is the credit side. So during the year, if you apply manufacturing overhead to the work in process inventory, you credit manufacturing overhead. Suppose that amount is $1,000. At the end of the year, we realize that the actual manufacturing overhead cost accumulated is 800. So the applied is 1,000, the actual is 800. So we actually over applied $200. At the end of the year end, the balance should be 0 because this account is a clearing account. Therefore, we had to debit $200 to manufacturing overhead. Therefore, we have to credit cost of goods sold for $200. This is the situation of over applied. Now let's take a look at another situation. Suppose the actual manufacturing overhead cost is $1,300. So this will give us a $300 under applied. So to make the balance to be 0, we have to credit $300 to manufacturing overhead, and we need to debit cost of goods sold for $300. This is the under applied situation. Thank you. Okay, so did you see? So if you are over applied, see if you are over applied, okay? If you over applied, so in order to write off this into the cost of goods sold, do you increase cost of goods sold or you decrease cost of goods sold? And I have the same question for under allocated. So if you need to write off this under allocated, are you increasing cost of goods sold or you are decreasing cost of goods sold? Anyone?
You're increasing
If you're
cost of sales.
under,
So remember, if it's over applied, do you have to debit the cost of goods sold or you need to credit the cost of goods sold?
You credits.
Credit.
If it's over applied, do you debit or credit?
Credit.
debit,
Credit.
Credit.
Debit, credit. Should we watch it again? Okay. No, I want to leave it for you to watch it. Okay. So when you over applied, you credit the cost of goods sold. Is that lowering cost of goods sold or increase the cost of goods sold when you credit the cost of goods sold?
Increasing cost of sales.
No,
Okay.
lower.
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 Lower. Okay. What is the normal credit balance? What's the normal balance, right, for cost of goods sold? It's like expenses, right? So the normal is the debit, right? This is back to 2100. Okay. So cost of goods sold is kind of like an expenses account, right? It has a normal debit balance, right? So if you debit the cost of goods sold, you are increasing the balance. If you credit the cost of goods sold, you are decreasing the balance. Okay. So one is the scenario of over applied manufacturing overhead. You write off into the cost of goods sold, you reduce your cost of goods sold because you have over applied, right? So during the year, you over apply the manufacturing overhead, you exaggerate cost of goods sold. Okay. Therefore, now to make adjustment, you have to reduce it. Okay. So for under applied is the opposite, right? So during the year, you didn't apply enough. So your cost of goods sold amount is lower. So now you have to debit the cost of goods sold, right? To increase it. So are we clear? So if it's over applied, okay, you reduce cost of goods sold. If it's under applied, you increase cost of goods sold. Okay. So with that, okay, now you can see this information. So when you write off cost of goods sold, it leads to lower cost of goods sold of 10,000 and higher increased cost of goods sold by 170,000. Okay. So what's your balance? Your balance of cost of goods sold before this proration is 21,600,000. And because of the over applied 510,000, you need to minus this. Oops. You need to minus the 510 because this is over applied. And you need to add 170 because this is under applied. Okay. Are we clear with this?
Yes.
Yeah. Okay. 1, 2, 3. Sum up. Okay, half of the class. For the other half, maybe you are busy with Facebook or whatever, or maybe you don't understand. That's fine. If you want more information or you need more help, let me know. And if you want to watch the video again, it's on our channel, right? So, okay. So is this the question number 2, right? So we are done with question number 2A. I'm sorry,
Grammarly
guys.
does more
Hey,
than
what
catch
happened here?
errors. With Grammarly, you can find really good, no, perfect words.
I'm sorry. Just give me 1 second. This is what happened when you have fancy PowerPoints, right? So next one. Do you think my PowerPoint is fancy?
Super fancy.
Okay, thank you. Wow, I really appreciate it. This is a big help. I feel very embarrassed. Okay, so now let's take a look at the second question, B. So now we are using a different method to deal with this under applied or over applied. So just for your information, we have figured out for machining department, it's 510,000 over applied, and the 170,000 for under applied for the assembly department. Okay, that's the information we already have. This time, instead of directly write off to the cost of goods sold, we are going to allocate this across the 3 accounts. Okay, cost of goods sold, finished goods sold, work in process. You know, in the first approach, what we just did is we dumped everything to cost of goods sold, right? But don't forget, the product cost also sits in the finished goods and the work in process, right? So a more accurate allocation should also include the finished goods inventory and the work in process inventory, right? So in 2400, you should have learned this, okay? The overhead applied, that's the product cost. And where are all these product costs? They are either in the inventory, work in process or finished, or they were sold in the cost of goods sold, okay? And now you are telling me that, I'm sorry, actually, I over allocated or under allocated that overhead. So that means my product cost is over allocated or under allocated, right? So if that's the case, right, when we make adjustment, we have to make adjustment to the 3 accounts, right? Rather than just the cost of goods sold, right? So this B is just a different method. Okay, so how are we gonna do that? We're gonna do this. First, let's take a look at the balance prior to the proration. Okay, did you see that on the right side of the screen? I used the blue color highlighted the numbers. This is where I got the number. These 3 numbers are the balance before the proration, before I make an adjustment. For cost of goods sold, the balance 21,600,000, finished goods 2.8, work in process 7.6 million. Okay, so I'm gonna use this information on the left side of the screen. I'm gonna calculate the percentage. Okay, the total balance is 32 million. So I want to know what are the balance percentage for each of the 3 accounts. It worked out here. Cost of goods sold is 67.5%. Finished good is 8.75. Work in process is 23.75. Okay, so these are the percentage, the proportion for each account. And now I think you would know, right? What are we gonna do? We're gonna use this percentage times that amount of over applied or under applied. Okay, and that's how I figured out that number should be, adjusted number should be. Okay, you can see this is for the over applied. I use a bracket. This means this is a negative number, reducing the cost of goods sold, reducing the balance. This is under applied, it's a positive number. That's going to increase your accounts balance. Okay, do we have any questions here? Anybody have any question?
Oh, I had one. For the last column, the 5 equals 2 plus 3 plus 4, can you just go over that, how you got the final answer?
Oh,
that?
I see. So this is the balance prior to the adjustment, right? Column 2. Column 2 are the balance prior to the adjustment, okay? And this information is given, okay? And number 3, that's the for the over applied machining department. Remember, this number will reduce the balance, right? So we are using the proportion, the percentage. So we know how many of this balance should apply to each account, okay? And for the assembly, we were mentioning these numbers will increase the balance, right? So that's why this number 2 column is the balance prior to the adjustment. And number 3 is the adjustment from the machining. Number 4 is from the assembly. And the balance after proration, the adjustment is number 5. You just this balance. Is that clear?
Yes, I was just looking at it. I didn't look across, like I looked straight up and down instead of at it left to right. So yeah, now I understand.
Okay, awesome. Anybody else have any other questions? So we are going to finish it. Then we'll take some break. Okay, we are almost done. Okay, so are we okay with this?
Yes.
Yes. Okay. Good. Okay, let's move on. So this is the second approach, right? The third approach. Oops. The third approach is the proration is based on the allocated overhead amount before proration. Okay. So instead of based on the balance, they were based on the amount of the overhead allocation. Okay. And you have already calculated, right? So here is what happened. Remember, for machining department, to calculate the overhead allocated, you are using the $65. That's the rate, right? And you are using the actual machine hours, right? So then you figured out what is the overhead allocation for each account. Okay. And so based on this balance, you calculate what's the percentage. And the same idea, you figured out how to allocate the 510,000 among the three account. Okay. So are we clear with this? So compared to number 2, the second approach, the third approach is just a different way to determine the proportion, right? The whole idea is the same. It's just like they use a different balance, right? Instead of using the balance for the cost of goods sold, finished goods, or work in process, now they are using the allocated overhead balance. Okay, Samarin.
No. I was just a bit confused. It's like work in progress first. I did with cost of goods sold first. That's why I had different number. I got confused. I'm sorry. I found that like the sequence is not different. What I did in my book.
Okay. Yeah. Okay. And why? Who is why? Yufeng?
Yeah, I got a question here.
Yeah.
So for the $65, isn't it a sort of a budgeted number as well? Isn't it an estimated number?
Yeah, so basically here we are going to, if you take a look at the C, probation based on the allocated overhead amount. Okay, so remember how we calculate the allocated overhead amount? We are using the standard budgeted overhead rate times the actual hours, right? That's how we figured out the allocation of the overhead. Remember that?
Yeah.
So
and then
you figured out this balance for each account. Yeah, this is how much you allocate manufacturing overhead to each account. And you based on what you have done, you calculate the proportion. And then you use this same proportion. Oops.
Mhm.
You use this proportion. Oh, no, sorry. You use this proportion, you times the 510,000 to figure out what's the adjustment to each account.
Mhm. And would you say the method B will maybe could be more accurate than this? Because
That's a very good question, because you're gonna know the answer in number 3. Okay.
oh, okay,
Yeah.
okay.
Okay, good. Okay, so I will move on. Now we are only finished with the machining department, right? Now, how about the assembly department? The same idea, okay? Assembly. So now you are using $63, right? Remember, that's the rate we calculate, 63, and times this actual labor hours, right? For assembly is not machine hours, it's labor hours. And you figured out what's the overhead allocated to each account. And based on this relative balance, you figure out what's the proportion. And then you can see what is the amount, the adjustment to make to each account, right? Are we okay with this? Okay, 1, 2, 3, go. Okay, so, okay, very good. More than half, yeah. Okay, so now you put them together, right? So this is the machining department numbers, and this is the blue, the red is for the machining, the blue is for the assembly. So then you put them together, you figured out what is the balance, okay? What is the balance after, okay? So this is the second question. The last question, when we are done with this last question, we're gonna take a break, okay? The third question, oops, I should not let you see. Which disposition method do you prefer in requirement 2 and explain? So we have we have immediately write off. This one, you just allocate 100% to cost of goods sold, right? You allocated 0% to the inventories, right? Number B, well, you calculate proration, the percentage proportion based on the relative balance prior to the proration. And number C, you based on the allocated overhead amount, okay? So number 3, which method do you prefer in requirement 2? Rain?
I prefer the working process dump, because the cost of goods dump, because it's super easy, but I think B would probably be the most accurate. For this question though, I think C is the most beneficial to the firm because the ending expense accounts would be larger.
Okay, very good.
But I think you have to be consistent.
You are absolutely right. I mean, A is very easy, right? So you don't have to do calculation, just dump everything into cost of goods sold, right? B and C involved with more calculations, right? Which one is more accurate? So the idea is C, right? It's based on the relative allocation, the relative allocated overhead, right? So that is more accurate in terms of calculating the proportion, right? If you just use the cost good balance, because the cost goods sold, there are other things, right, in that balance, right? But the allocated overhead amount, that's just for the things like of the question, right? So that's the most accurate one. So let's see. If the purpose to report the most accurate inventory or cost good figure, preferred one would be the number C, okay? And then if you take a look at the difference, the difference is not very significant, okay? And really depending on the objectives, okay? So you may prefer any of the other two, okay? So the manager may have a preference, right? In terms of their objectives. So sometimes, let's say, I want to keep my cost goods sold low, right? which method can give me the lowest number, right? So those kind of things. Okay, so let's see. Okay, great. So we are just on time for a break. Before we take a break, does anyone have any question? Does anyone have any question?